Leslin, and together with my teammates, we want to take you on a journey through the story of global economic trends and recovery, spanning from 1970 to 2021. Rather than just listing numbers, we wanted to understand that why behind the shift, why some countries surged ahead, how others adapted during crises like COVID-19, and what these trends say about resilience, wealth, and growth. We used a rich data set from Kaggle covering decades of macroeconomic indicators, including GDP, trade, income exchange rates, and income exchange rates and population, and visualized it all in Tableau to bring the data to life. In this story, we'll explore how the world's leading economies evolved, not only in size but also how they support their citizens, manage global trade, and respond to shocks. Let's start by looking at GDP and income levels, the building blocks of economic power. Over to my teammate.
Thanks, Leslie. If you look at the average GDP chart, it shows a big fight. The US is on the top with over $21 trillion and China right behind it with 40, $14 million trillion economy. They rule the world's money. But large GDP doesn't mean higher income for everyone. If you look at the average per capita GNI chart, the US leads again with over $65,000 per person, while China and India lag far behind. Germany, Canada, and UK show relatively strong income per individual despite having smaller economies. This difference spills the tea. A country can look rich, but if the cash doesn't spread, most folks stay broke. Let's move to net exports and exchange rate. Over to you, Ashlin.
Thank you, Chandra. So I'll be continuing the story on the net exports and exchange rates. So let's see what was the story behind trade and exchange rate which shaped the recovery. In the net exports by country charts, we can properly see that India and China rebounding sharply after 2019, especially in 2021, highlighting their export strength. On the other hand, countries like US, UK continue to show negative net exports, signaling they import more than they sell abroad. In the exchange rate chart, we observe a stabilization in major currencies post-COVID. In the slight fluctuations in India's rupees and China's yuan, showing relative control in monetary policies. These trade and currency dynamics reveal how countries adapt to global disruption differently. This was the story behind the trade and currency exchanges of the whole GDP thing. Continuing to Sajith.
Thank you, Ashlin. So let us discuss about population and final takeaways. Finally, we included the population by country map to show scale. China and India together account for over 2.7 billion people. This means even small improvement in trade or income impact a huge portion of the world. Bringing all these elements together, like GDP, GNI, export, exchange rates, and population, give us more complete picture of economic resilience. Our key takeaway: economic dominance isn't just about GDP. It's about how wealth is distributed, how countries engage in trade, and how well they adapt to change. So here are our final insight and recommendation. In summary, we learned that while developed countries remain dominant, emerging economics like India and China show increasing resilience, especially in trade and output. Our recommendation is that International Development Group invest in export infrastructure and support inflation control in emerging market to enable sustainable growth. Thank you once again to all the economic policies advisors, international development agencies, and global trade analysts gathered here for this presentation. We appreciate your time in exploring our data story. We hope this dashboard provides you new insight into how economies grows and adapt, not just through numbers, but through strategy, equity, and resilience. Feel free to interact with the dashboard to explore more countries and trends on your own. Thank you.
Thank you all.
Thank
Thank
you.
you.